Thank you for tuning in to the Black Money Tree Podcast, hosted by entrepreneur, investor, and philanthropist Jerome D. Love. We are committed to teaching you how to build wealth so that you can build your community. At the Black Money Tree, our goal is to empower wealth creation and create economic self-sufficiency in order to empower generations to come. Society grows great when old men plant trees whose shade they know they shall never enjoy. Season 1 is powered by Wells Fargo Bank. Welcome to the Black Money Tree Podcast.
Welcome to the Black Money Tree Podcast. I'm your host, Jerome D. Love, and I'm so excited to be here for another episode of the Black Money Tree. Now, for those of you who haven't heard yet, the Black Money Tree is a wealth development strategy that we're hoping will change the face of the Black community. If we are going to have strong, sustainable communities, we are going to have the resources to do so. Now, we focus in two areas, entrepreneurship and real estate development. Today, we're going to have a candid conversation on real estate investment. Now, if you watch any of the podcasts, read any of my books, you know real estate is my thing. I've been in real estate as a broker almost 25 years and investment another 20 years. And along the way, when you're doing real estate, people are always asking you questions. How did you do this? I want to do that, this, that, and the other. And I oftentimes give people information, but sometimes I get frustrated because very few people want to listen to what you tell them. Well, I guess today is one that really listened, and he's implemented the things that I shared. And today he has surpassed the things that I've done. And we're going to pick his brain and talk about how he's built his wealth in real estate. So our guest is Mr. Onaje Barnes. He is the owner. I don't know exactly all your company names. Barnes Real Estate.
I got a few companies.
Barnes Marketing.
Barnes Estates, Barnes Marketing, New Day Lending.
New Day Lending. Okay, that's a new one. I haven't heard about that. So you're doing loans now?
Yeah, we'll be doing that for 2022 January.
Okay.
Yeah. We'll be starting that up. T and Ray Holdings, which I named after my kids. That's a new company. And then obviously my wife has the Our History Told, which I'm a minority owner for once in that one. And that's a book on Black Wall Street, the Spirit of the Community, kids book. So
well, you're looking dapper. I like the jacket.
Appreciate it. You ain't bad yourself. You know, I had to come on your. I couldn't let you outdo me in your own podcast.
I had to step it up, man. So now let's talk about coming up. You didn't come up with wealth.
Not at all.
You grew up, third ward, single family home. Talk a little bit about how that was and how that motivated you to be where you are today. And tell me what you learned about money, if anything.
Yeah, I was always good with math, good with science, so I'll give that caveat. But I did grow up the third child of four, single mom, in the hood, labeled whatever you want to label a black youth of today, right? Yeah. Labeled all that negative stuff or whatnot. But, she always fostered an education type of household. She was an educator. All my siblings have grown up to become educators, so it's kind of in our family. And so we always had a pride around just learning stuff. So just having that value, ended up graduating salutatorian at Jackie High School, went on obviously to go to the University of Texas, and where I met you at, and obviously we're in the same fraternity. But money for me was, I've always had a unhealthy mindset around money, mainly because, when you're growing up as poor as I did, where you really thinking about how you going to eat, new clothes, seeing how you can stretch these shoes for 9 months and things of that nature, for me, it had a profound impact on, I grew up in a level of poverty that I just don't never want to see that again. I ain't ever trying to go there. I ain't trying to have my kids go there again. And now I'm all about generational wealth and figuring out ways for us as a community to not only participate in long-term wealth strategies, but for, I don't care about my kids being super rich, but I want them to have a better shot at life in the starting line than what I had.
So, it's funny you mentioned that, and I have thoughts about it at times. Sometimes, at the end of the day, you're a success.
Right.
And I don't think you would be disappointed if your kids were like you. But the reason you are the way you are is with the process that you went through.
Absolutely. I think about that a lot.
So I wonder at times, by us providing so much for these kids and them never having that hunger that we had.
I think about that every day.
So what do you do? Your kids are younger than mine.
Yeah,
so.
I mean, for me, I think about that every day. My kids have chores. They don't get allowances. They got to earn everything that they get. My son right now wants a new basketball game or whatever. He been asking for it for 2 months. I'm like, give me straight A's and we'll see what we talking about. But but much like you, I bought my son a soda machine and a snack machine at our apartment complex. So that's his little mini business. So we definitely, my daughter's clearly she's probably going to join the real estate path with me or whatnot. So I got her in a little mini design and things of that nature. So I'm big on them understanding concepts of money, understanding entrepreneurship. And I agree with you 1,000% that, you can't give your kids like, just cause you might be well off, your kids still need that hunger, that drive, because that right there might be just as strong as your brain. That hunger and that drive can absolutely lead you to big places.
See, I'm a little bit different in that. So my kids are getting to that age now where they're ready to graduate. I got a senior, I got a junior, I got a sophomore. So when my kids were your age, I was still on the come up. Yeah. So while if I looked from a net worth perspective, I was probably well advanced of most people, but I felt broke. Yeah. Because I was an entrepreneur. So I didn't know when my next check was coming. So I may have had no debt. I was living in a little bitty house. I wasn't shopping, wasn't going out, no designer suit, none of that stuff, because I felt broke and I knew that I didn't know when the next check was coming. I was building my real estate portfolio. So that being said, my kids, my son now, he's the youngest. He gets spoiled. He's in basketball camps and all this stuff. But when my daughters were that young, I wasn't ready to drop $400 a month because you want to go to basketball camp and things of that nature. So he gets a little bit of a special treatment.
But that last child happens. That last child all
so
the time.
I just wasn't in a position where I could do the same things for my older kids as I can my other ones. So talk about it. So you went to UT. You graduated economics, I believe.
Economics.
And you got a good job. Matter of fact, you still got a good job.
I'm very fortunate in my career choice. I graduated with an economics degree, but went into the fashion industry. So I started out at Foley's, which is now owned by Macy's or whatnot, as a buyer. So I started out there. Really cool job. I could talk for days about that job. Like, it's a cool job. Yeah. Went on to JCPenney doing financial planning. Got on with Nike as a financial planner, and I'm still my position now is called a marketplace partner executive. So I work with Fortune 100 company here locally, and it's a good job. It ain't a bad job.
Now, but you've gone on to build. I heard you talk a couple weeks ago, and let's talk about your real estate first. So early on, I remember you and I were talking, and we were just always clicked, even though you're younger than me.
Yeah, we always clicked.
When you was online, I remember we used to go to lunch. We used to chop it up and things of that.
Alpha Phi Alphas are not.
Disclaimer. But I remember at some point, I don't remember exactly if you had moved to Houston or whatever, and I was buying houses.
You know what's crazy? I remember this very specific. So you have your moments in life where you remember certain things, and a lot of stuff we forget because we get old or whatnot. But there's a couple things I remember for sure. Yeah. We had talked about you. I believe you had some duplexes in Killeen.
Yes, fourplex.
Fourplex. You had a fourplex in Killeen. And so I was always fascinated by that. I think you had a brokerage pretty early in Austin. Yep. You were fairly young to be a broker.
Yeah, I got my real estate license when I was 20.
Yeah, you were fairly young to be a broker in Austin. And so I just remember having that conversation. And for me, when we had I was at Foley's, and it got bought out by Macy's. And essentially that buyout, 25,000 people nationwide got laid off. Okay. And that hit me. I was like maybe 25. Now, I was still young and hungry, and I thought I was going to work for that company forever. Now, they still offered me a job, but that was my wake-up call to say, hey, their job is not to get me rich, right?
Yeah.
They're paying me to do a service.
Yeah.
And I am obligated to do that service. That's it. They have no other obligations to me.
Yeah.
Right? And so that clicked for me, and I understood that really early. And I don't know if that was economics background. I don't know if that was growing up poor, what it was and whatnot. But that clicked for me. So when I moved to Dallas, I remember I had bad credit. I couldn't even get the apartment. My wife actually signed on the papers to get the apartment, even though we were going for my job, so to speak. And I realized about 4 or 5 months into Dallas, and we had just got engaged. I didn't want to be in Dallas. I wanted to come back home. And I was like, man, I got to have an alternative stream of income because I just got off of this layoff and all that kind of stuff. And I just started thinking about passive income. So once you start thinking about passive income and side hustles and all that kind of stuff, then real estate just pops up. Like you can't not Google that stuff and not come up with real estate, right? And so I remember picking up the phone. I remember talking to you one night, and you had recommended Robert Kiyosaki's Cashflow Quadrant book to me. And we were always talking real estate, but whatever. I read that book, and that based on your recommendation, and that really that was like, oh, this is it. That was my this is it moment. So I remember that conversation. I literally was in our spare bedroom. Like I remember the exact moment where I was at in that conversation. I can't remember what we talked about, but I remember the end result was that you had motivated me to read that book, and I did.
You know, it's funny, like you say, you have those moments. I remember you calling me a lot. I remember talking a lot, and I don't remember all the details. Like, you know, what the one conversation I remember is we was talking about buying a house, and I was saying every time I have a kid, I'm gonna buy a house. And that's gonna be my college fund. You said, "Man, that's the same way." You know. That
that's
was
exactly
kind of my
how I
thought
started.
process.
I mean, that literally was my mindset. I was really, really simple, and you know, now we've got a decent size portfolio now, looking to continue to expand. But literally, we started from just a simple aspect of one. We used our first home as an investment property. Now, most books tell you, the sophisticated books will tell you that your home is not an investment because you money going out, this, that, and the other. But you know what? If you buy right up front, right? And real estate 101 is we make our money when we when you buy, right? That's real estate 101, right? And so for me, I wanted to use that same mentality on our first house, which we did. I got a great loan on that first house.
I remember. I was your realtor.
I remember somebody was my realtor.
Right.
Right. So, but again, I bought something that most people wouldn't have bought.
Now, you know what? I would tell you, you were more advanced than me and your thinking at that point, because I was like, why is he buying this house?
And everybody told me not to buy that house.
But you wanted to buy that house. And I was like, man, because it was older. It needed some work.
It needed a lot of work.
And I was like, I don't understand why he's buying this house, specifically to live in. But you're still there today.
I've been there 14 times.
Job of remodeling it. It's beautiful. And I would imagine you have a pretty good amount of equity as well. So
yes, that house, like you weren't the only one. Everybody told me not to buy this house or whatever. But my background is numbers. I am a numbers guy, right? I'm big on understanding costs and equity and appreciation potential and all that kind of stuff. So we did buy a foreclosure, got a good deal on it, put some sweat equity into it, put some we put some money into it. But you may not know this about that house, but it was listed for $180. My pretty good dope realtor, he was able to negotiate $135. We bought it for $135.
I did?
Yeah, and you're like, what's going on? I know. He's like, what? And I put about 35 into it, so I'm like all in for like 160, 165, somewhere around there. And within like 6 months, we had a $240,000 appraisal. So I got that cash out early.
So y'all heard that. Do business with Jerome Love LHS Realty, and you'll have over $100,000 equity within 6 months. Go ahead. Disclaimer. But, you know, that was my introduction to the BRRRR strategy, which is what I kind of focus on within real estate. That's buy it right. Get a good realtor, right? Rehab it. Rent it out. I didn't rent it, but I lived in it. And then you refinance and then you repeat. So literally after 6 months, we were able to get a $240,000 valuation. With pretty soon, maybe a couple months later, we got a $40,000 cash out refi. Used that $40,000 because we were going through the financial crisis. Saw another home. So at this point, I dropped you. Because his wife got her real estate license. He stopped using me. Go ahead.
That's a fact.
I ain't mad. I ain't bitter about that.
Yeah, we got to keep it all in house, right? So we found another crib listed for like 60 or whatever. I only had 40,000 to my name because that was just the cash out refi. I still ain't had no money at this point for the most part. Took that 40K. That was the most money I ever seen in my bank account ever at that point. Took the 40, the whole 40. Offered that on that foreclosure that was listed for 65. It was during the financial crisis, so they took it. They took it. And that was in Harlem Clark, and that house right now is probably worth close to about $175. And I bought that for $40 and probably put $2,000 into it back in the day. I mean, I was like working. I was doing all the work myself and all that silly stuff or whatever. But so I just kind of stumbled into this deal, and literally, man, I bought that house for $40. Probably spent about $2,000 at Home Depot, and about 3 weeks of me sweat equity, going to work 9 to 5, come home, kiss the wife, no kids at that point, work from 6 to midnight. I did that for like 3 weeks straight. Grind mode, grind. Right, you know me, I just go nuts. And so I did that, got the house fixed up, and I was renting it out for $900, like literally 3 weeks later after the closing. So after that, I'm like cash flowing like $450, $500. I'm like, man, this is dope. Like,
You know, I had a similar experience. My first one was $900 a month too. I bought it for $10,000 though, $100.
Well, that was a little bit better than mine.
I put $25,000 in it.
Well, so, we a little bit different. We do a little bit different.
Mindsets are different. You're more of a left right. Like, I'm not really gonna do a whole bunch of work. I have before. I remember the first house I bought, man, they had some of that stalk grass that was up to here in the backyard. So the whole house was overgrown. And I, in the middle of the summer, took a machete and cleared the whole yard in the middle of the summer. So I'm drenched with sweat. I was putting some work in, but you're a little bit more hands-on than me.
I am hands-on. I mean, to the point where, like, my hamstrings are hurting right now because I was hauling trash on Sunday. Now, obviously, I can pay people to haul trash, but I wanted to be on the work site or whatever and feel like I'm still involved and feel like I'm doing something.
Once I got to the point where the cash flow was decent and able to take care of it for itself, I valued my time to the point where I need to be doing something else. And I'm
absolutely.
Pay somebody else to do that.
I'm still learning that. Still learning that lesson.
But when I bought my house, the experience that really made it click for me, I literally took my last dime and put in it, and my wife was tripping, was like, "What you done? You done took all our money and put it in this house." And I believe my son was a baby, or I don't remember, he may not have been born, but I had a baby. And my wife called and said, "I need some diapers." We ain't had no money. And we were coming to the end of the construction on this house. And there was an old lady who lived right down the street. And she had been coming by. Her mom had died. She was living in a house with like her 8 brothers and sisters. She was like 70. Wow. She said, "I've never lived in my own house in my whole life. And I like this house. I want to rent it." And she came down one day. After she was coming like every other day, like it was her house.
Yeah, she knew. She's like, "You gonna rent this house to me?"
And she's telling my people, "No, I want to put carpet here." And I'm like, "This ain't your house, lady." But she said, "I'm ready to pay my deposit."
But
that day that my wife, So that day my wife called, told me she needed some diapers. I didn't know what I was gonna do. She gave me $900 of deposit. I took that money, bought some diapers, bought some groceries, and that's when it clicked for me. You got a property that's paying your bills, that's building a passive stream of income.
Absolutely.
So let's talk about, so that was your first house. Now, we did a deal at some point. I don't know where you were. I got you 2 more.
First of all.
Okay.
You know, I was driving up here, and, you know, I do the whole clubhouse thing. I literally just told that deal about 20 minutes ago.
Okay.
I'm going to tell this deal again.
Okay, go ahead.
I don't know if you know this. That's the biggest mistake you ever made, not getting those properties, selling those properties.
Well, I agree. And if I could go back, I would not have sold them.
But you got to do what you got to do.
But, yeah, and at that point in time, I didn't have the cash available, and I was so into buying properties cash.
But you got paid on that deal. You got paid.
You paid me on that deal.
Yes,
I probably should have charged you more.
No, you got paid pretty good.
But here's the thing. My mindset at that point, and you have to school me to this when we'll talk about your apartment complex later. When you get to doing something and it's working, you like, I'm just going to keep doing this.
Yeah, no
So for me, it was like, I'm never going to get a loan on a house again because I had 4 foreclosures. All of them was when I had these loans, 100%, da-da-da. So I was like, this is the perfect model. Buy these houses, cash. You ain't got to stress. They cash flow. So when I wholesale those houses to you, I just didn't have the cash available. Now, I could have gotten a loan, but that didn't even cross my mind because I was like, I'm not doing loans anymore.
I'm team loan.
Yeah. So talk about that deal a little bit more.
Okay, so this is a fantastic
It was 2
deal.
houses.
It was 2 houses.
Yeah.
I tell this story a lot, by the way.
Yeah.
Like, so this story, so backstory, okay, you call, because our sons are really close in age.
Yeah.
Right? And I don't know if you called me or I called you or whatever, and it was just literally like, hey, what's going on? Hey, we should set up a play date or something to that effect, blah, blah, blah. Yeah. And literally, like, I'm like, hey, what you doing right now? You want to go get lunch? You're like, no, I got to go up to the north side and go take a look at these package deals of this house. Yeah. I'm going to take this listing or whatever. I said, and again, now I'm like in real estate mindset. Yeah. Like, I'm an investor now. Like, I think I had 3 or 4 properties or whatever, but I was like super hungry. Yeah. So anytime somebody says something about some house, I was like, so tell me about this package. Yeah. So what you got there or whatever. He said, oh, yeah, it's a lady, and I think her husband died or something to that effect, and she didn't want to take the properties, and the son wasn't able to. I said, well, Jerome, can I get in? Jerome was like, well, you in the game like that? I was like, yeah, I can do something. Yeah. And I'm not fronting, but what you didn't know was, so I had some stock. Yeah. From a company.
I remember you told me that.
I had some stock from my company.
I was jealous because I ain't ever worked for nobody. I ain't got no stock.
Yeah, so I had some stock, but that's all I really had, right? Like my stock was my savings for the most part. And you were like, hey, I got these deals. I got, maybe she'll sell you 4 of them. I'm like, okay. I looked at 4 or 5 of them, and I was like, okay, I want a couple of these or whatever. And I'm like, man, what can I get them for? He's like, well, you can't get into them. I was like, well, man, I can't walk them into the property. Like, I can't pay full price. He's like, all right, cool. We'll figure it out. Blah blah. So we got those houses for $16,500 each. Yeah. So it was 2 of them. Yeah. You got a wholesale fee of $5,000 each.
I remember that. I got 10 grand over that.
Yeah, you got 10 grand. That's a nice deal. Yeah. It's a nice deal. But here's the deal. I wasn't tripping. Yeah. At all. I didn't flinch at all about paying your wholesale fee because at the end of the day, I got 2 houses for $42,000 total. Yeah. Right, and these were good brick houses.
Let me pause right there. And that's what impressed me so much about you. Because I never forget when you say, well, how much? I say $5 grand a piece. You said, that's a little steep, but all right, we'll make it happen. You know what I'm saying? Yeah. So you saw the big picture and you realized, hey, it's nothing wrong with him making a little money.
Here's what you don't know. Yeah. Guess how much money I had in my name?
How much?
About $46,000.
Wow.
So I was betting, man. I was shooting shots. But I was shooting shots. I was shooting the shot. And I literally went home to my wife after we went up there, and we kind of had an agreement on a deal. And I said, babe, we got about $46,000. We're going to buy $42,000. Now, here's what the other backdrop. This was at the height of the financial crisis. Yeah. Real estate was not where people were buying, right? And matter of fact, everybody was still scared about their job. Like, I'm literally counting every 2 months, like, am I going to get fired by Nike today? Yeah. Like, I'm literally counting from day to day, like, am I going to make it today? Yeah. So I was taking a big chance, but I've always been good at numbers. I've always been good at analysis and figuring out, okay, where's value at? And at the end of the day, I was like, man, this real estate market could tank for the next 10 years. I'm good because I can rent these suckers for $900 and I'm all in for $21 a piece. Yeah. And that alone. Yeah. I was like, screw a sale. I don't need to screw a sale, nothing. Like, I'm good. Yeah, like, I just need to rent these bad boys out. So I took a big chance. I remember the conversations of my day. I remember exactly where I was. Like, I got 2 moments in my life that I remember specifically with you. Yeah. So I remember specifically, I told my wife, I said, hey, we're gonna spend this $42,000 and it's all of our savings. Yeah. And she said, is it a good deal? I said, yeah, it's probably the best deal we're ever going to make in our lives. Yeah. And I literally told her that. I said, it's the best deal we're ever going to make in our lives. So we're going to fast forward 10 years and we're going to talk about this deal. Yeah. Right? And she said, for real? She said, if you believe in it, she's like, are we going to make money? I said, yeah, but we're going to take a chance. She said, go for it. Yeah. And that there, that's why I'm still married to her today.
Yeah, no, that's a good wife. That's a good wife right there, man. You got to hold on to that.
I got to hold on to her on that one because she's always been super supportive. She may not know all the numbers, may not be into the details, but always super supportive. So got that, closed that deal. I inherited both of the tenants. One of the tenants is still with me today. Wow. Crazy. The other one, that property needed a lot of work, so we, mutually, I needed to fix that one up. But long story short, I'm renting them for $13.50 now. Wow. Right? And that's probably still on the market. Yeah. So I'm renting them for $13.50. I did do a cash out refi because I'm a BRRRR strategy guy. So I did a cash out refi about 3 years ago. Pulled $100 grand from both of them.
Whoa.
Pulled $100 grand from both of them. So that's $200 grand.
I think I needed more than that 10 grand, man. You should be
it took me. I took all the risk.
But the funny thing that you said when you talked about how you thought through the strategy, $21,000 a house, how can I lose? And that's what I tell people when they tell me, oh, I flip houses or why you buying in the hood. I say, listen, when you look at CNN and MSNBC and they talking about the market tanking, they ain't talking about South Park. They ain't talking about Sunnyside. When I buy a house at $10,000, $15,000, I could lose damn near 50%, and I'm still making money. I could reduce my rents 20, 30%, and I'm still cash flowing.
And you're making your own neighborhood better.
Yep.
Or the people that look
Yep.
like you,
Yep.
that area better, right?
Yep.
Because you come in, go do some development, you're going to fix up the house at some point, right? And that's a better unit on the market than was already on the market.
Yeah.
And that for me is a big one as well. But to that point, sometimes in real estate, in all business, right? You got to tune out the noise. You got to come up with a strategy, right? You got to come up with a strategy for you that works for you and your family. And you got to ride that sucker. You got to work it, right? Yeah. And there's a lot of noise, right? Don't invest here. Don't invest there. Everybody got an opinion, right? The if it's with me, folks. I call that right there. Yeah. If it was me, I would. It ain't you. Like, and sometimes, especially as the newbie investors, we got to get that if it was me out. Sometimes you got to tune people out. Right now, I got a couple of my friends I'm tuning out right now. Yeah. Not because they're not my friends. I just don't. I got to stay focused. Yeah. Right. So sometimes you got to tune that noise out and take those chances, regardless of what people say. When you know it's real.
Yeah. So let's talk about where you at now. Like I say, I was helping you out early on, mentoring you, and I'm like, oh, that young little guy, he doing his thing. I'm glad I can help that little whippersnapper. And I turned around on Facebook one day, and he walked around talking about, yeah, this is my new 18-unit apartment.
21 units.
My bad, 21 units. So I immediately picked up the phone. I said, oh, you got an apartment? He texted me the address. I immediately drove there, and you walked me around, and you started telling me how you did it. And that's how I started realizing I had I forgot to remember. This is my moment that I remember when I say I got to step it up. You said, man, I forgot how you said. You said you're wasting your equity. All your money in your houses. Your money ain't working for you.
Yeah.
And you told me how you pull your money out to get this apartment. So talk a little bit about that.
So most of us have heard of ROI.
Yeah.
Return on investment.
Yep.
Right. That's a common thing. If you probably listen to this podcast, you probably heard of that, right? Yeah. And I'm sure some of the other guests have talked about that, right? But something that we don't talk about is return on equity, right? So equity is real, is it not?
Yeah.
It's real, right? And it's sometimes it's abstract because it's hard to extract that equity out of properties, right? Real estate's not a liquid asset. Right, it's not when you need the money in real estate. It's hard. You just can't go to the bank and go get it. Right, like not tomorrow. Right, you got to kind of do you got to go through loans, jump through hoops. It's a little bit more difficult to get. But that equity is sitting there, and that equity has value. Not only does it have the value of the $80,000 that's sitting there, but it has the value that $80,000 isn't working for you. It might as well be sitting in that CD, which we probably tell people not to put money in the CD. Yeah. Right. Yeah. Like you probably say, I tell people, hey, if you got $80,000, don't put it in no CD. So why are you letting it sit in a property the same way you would let it sit in the bank, not doing nothing? Yeah. Right now you're getting the dividend, you're getting the rent or whatnot. But that concept of return on equity is that once you start to understand that, then you can understand the concept of actually investing to get infinite returns. So I don't even talk about a cash on cash no more. I don't even talk about ROI no more because I'm going to hunt for infinite returns. I'm going to get all my equity back, all my initial investment back. So anything afterwards is just gravy train. And so to bring it a little bit home, that 21 unit complex that you toured, I bought that with the $200,000 from the two deals.
Oh, you killing me, dog. You killing me, dog. No, that's so good, man. I mean,
that was my down payment money.
That was your down payment money, man. This is man. I couldn't have planned this podcast episode no better. I didn't even know you were gonna talk through all that. So now, of course, we got to pick your brain. You just an economist, and you got an opinion on everything, and you always gonna keep it real. What we're seeing in the economy right now, what's your thoughts? I mean, prices are extraordinarily high. I was going to build a couple houses earlier this year. The lumber prices of the same house I built a year and a half before was almost double.
Yep.
So I kind of had to back out. And I've talked to several people. They're kind of like, well, they're going to stay up. It's probably not going to go down, specifically here in Texas.
I agree with that.
So now I'm kind of in a place. Do I get back in the game? Because my thought process was, let me wait for stuff to drop. COVID, what are you seeing? What are you thinking? And where should people be investing right now?
So I've talked about this a lot for hours and hours. So I'll try to give you the bridge version, right? So you got to understand money.
Yeah.
What is a dollar? It's a piece of paper, right? It's not backed by anything. It's fiat currency. Fiat, Latin root, fake. That's what it means, right? Fiat means fake. So if you understand what money is and what has value and what doesn't. So housing prices, Jerome, is housing going up or is the dollar going down?
Yeah, going up.
No, the dollar is going down.
Oh, okay. I'm sorry. I thought you said housing going up.
Yeah,
Okay.
housing, the prices
are going
up, but the prices in relation to dollars, right? So if you just understand the mere nature of that the dollar is being devalued, it's not that the housing is going up, right, in value. The housing, the bricks ain't staying. It's the same, right? Like, it ain't really changing, right? Gold isn't really changing, right? It's the dollar itself that's going down. And so the question is, why is the dollar going down? Why are we seeing this hyperinflation? And we are really in a hyperinflationary period, right? We're seeing it because, guess what? You pump a bunch of money into the market, and that could be both administrations. Like, people like to just call it, liberals pump money, whatever. But this all started with Trump. Trump was buying up bad corporate debt and things like that. He pumped $6 trillion into the economy. And you had to do it because we had 20% unemployment. I don't think anybody even knows that or realized that. But our unemployment rate had got above 20%, which is unheard of. You're talking about Great Depression.
Trump.
Oh, yeah.
Okay.
That's what happened immediately after COVID, like that April.
Oh, okay.
April. So think like COVID kind of hit America March, April, May, June. By June, we were kind of in that 20% unemployment realm. Yeah. That is disaster zone. That is economic collapse zone. That is there is no more America zone. And I don't think people understand that and how dire a situation that we were in. So you kind of had to take a bazooka to it, right? Like literally both administrations have taken a bazooka to the situation, right? Now that bazooka is bazooka full of dollars, right? Like the Federal Reserve, quantitative easing, pumping, bailing this company out, bailing that company out, bailing out people, writing checks, $600 checks or whatever. All that stuff is money into the system. So let's just take it to Main Street. Okay, so that's high level. Let's take it to Main Street. Okay, if you didn't lose your job, and your wife didn't lose your job, and everything more or less through the pandemic, you weren't in that 20%, you weren't in part of that 20%. Everything was still going good, right? More or less straight. But now you got these $300 checks per kid coming because we got to give everybody equal share, which I agree with. What you gonna do with the extra $300 times 4?
Yeah.
Right. So now you got $1,200. What you gonna do with that?
Yeah.
Some people were saving, but there's a certain point where savings is a mental thing, so people start spending it.
Yeah.
Now you got. Now what do we know about supply and demand? The more you spend, the more I gotta spend to compete for the same item. Yeah. But on top of that, we still got COVID. America doesn't make anything, right? We're not a manufacturing hub anymore. The Asian countries are, right? And so we make so much stuff overseas. Now you got COVID, everybody getting sick worldwide. Countries are shutting down, factories are shutting down, workers can't work, right? So you got this global supply chain where less stuff. You can't get as many TVs. They can't make as many TVs as they were making a couple years ago. Yeah. Right? Now, you want a new TV with the $1,200 check you got. Yeah. Right? Now, there's less TVs on the shelf. So now they used to be able to produce 10 for this store. Now they only got 3. Yeah. Okay? You got $1,200, but I got a $1,200 check too. Yeah. So how much the TV? Why would the store keep the TV for $39.99? You know what I'm saying? Why would they keep the TV for $400 or whatever when they could probably charge $500 or $550 because they also know they not got no more coming in? Yeah. No, I got you. Right. So this is the basics of this supply and demand. So we have a shortage of supply, which drives up prices. We also have a influx of demand, which also drives up prices. Yeah. Right. We need more demand because you got more money. Yeah. Right. And so no, all of America didn't, but a good chunk actually was okay. So you have a confluence. Typically, prices will go up with just one of those factors. Yeah. Now you're talking like 2 and 3. If I could go further and further on some other dominoes, right? Like there's just massive supply shortages, massive demand, right? You got the Gen X generation. You got the younger millennial generation. They're entering their own, right? They're 30-ish now, early 30s or whatever. That crowd, they've got money now. They never bought a house. I want to participate too. I hear OJ doing cash out refinance, getting $100,000. I want some of that, right? Yeah. So now all this is built up demand, and that built up demand will always drive up prices. So the demand can go down, but then you got these supply shortages as well, and then you also got the cheap interest rates. Money's on sale.
Yeah.
So like you got a whole lot going on. So it's a little bit convoluted, but you got a whole lot going on, which to me, and here's what I fear, and I've said this a few times. I fear that America is actually becoming a renter nation.
Yeah.
And when I say America, people that look like us.
Yeah.
It's our home ownership rate is actually down. So me and you, we run around like, oh, housing market's on fire. Everybody I know is buying. But actually the rate of an aggregate, when you add it all up, where it's the home ownership rates is actually shrinking because it's less affordable and a lot of us can't afford homes. And so for me, I'm an evangelist on home ownership. I want people to participate the way me and you have been able to participate and benefit from it. And it's tough right now. It's very tough, and I don't think it's an easy. And people look for silver bullets, but there's no silver bullet to this problem. Because understand this, I said both administrations, and I didn't necessarily say they were wrong.
Yeah.
Because they had to do what they had to do in the situation.
To survive.
It's just negative externalities. There's always a cause and effect.
Yeah. So I know we could talk about this for hours, man, and I know we over time. They already signaling me. So before we go, drop on us website. You have these wealth mastermind events. You're doing podcasts, training, tutoring, all kinds of stuff. Just give us a couple of them, and I have a coaching program, so don't talk about your
Okay, I won't talk about mine.
Yeah.
That's fine. So you can find me at onaje10k.com.
Yeah.
And if you want to just join if you want to join my buyers list, I might be doing some things next year. If you just want to schedule a one-on-one coaching session, you can hit me there as well. But really, if you just kind of select, you can also join. I have a Facebook group called Real Estate for the People. It's Real Estate for the People. We got experts that go live every day, literally, if not twice a day. And you can kind of hit me there. But again, Onaje 10K, sign up just for anything, free stuff, and you'll get on my mailing list. And we host probably every 2 months mastermind sessions, right? This is what the other communities do. They mastermind. They get smart people in the room. We talk about subjects, and we go figure some stuff out. So this is less of a teaching, like there's some teaching element to it for sure to get us all on the same playing field, but more of some old school real estate masterminds that have kind of been neglected from our communities, where we can just get smart people in the building, right? And let's talk about how we can go get this money.
No, I love it. Thank you so much, OJ, for joining us on the Black Money Tree podcast. It's a pleasure as always. Thank you so much for tuning in. As you can see, mentorship has its privileges. We can help pull ourselves, our communities up, and we can empower our own communities. And I think that that's what this is an example of. When you control real estate, when you control assets, you have power, and you have the power to transform and change the lives of others. I always tell the story about one of my tenants. He called me and he told me, before I let him in, he said, hey man, I caught a case and I'm living with my mama, but hey, I'm trying to get it right. I took a chance. I rented to him. And to this day, he's one of my best tenants. Been there over 7 years, always paid his rent on time. And now he's looking at buying a house. So that's because I was in a position of power. I was able to make an investment in him. And our goal with the Black Money Tree is to help more of you to have money in your pocket so that you can help others in your community. So make sure you go to our website at theblackmoneytree.com. Follow us on Instagram, Facebook. Also, subscribe to our YouTube and get a copy of the new book, Closing the Wealth Gap, How to Build Wealth in Black Communities by Investing in Real Estate. Until next time, thank you for tuning in. Thank you so much for tuning in to the Black Money Tree podcast. Don't forget to like and share this video. And if you want more content like this, follow us on Instagram, Facebook, and Twitter. We'll see you next time.